Another crypto bailout could be coming, but customers are still facing months of frozen withdrawals. This is the Daily Forkast, July the 6th, 2022. I'm Joel Flynn. Nexo is trying to buy Vauld, but it has 60 days to make a decision. Voyager Digital has just filed for bankruptcy. Celsius is trying to avoid that and pays off more loans. There has never been a more important time to be paying attention to crypto. This is what's happening from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Vauld customers could be facing months of frozen withdrawals. That's as rival crypto exchange Nexo looks to complete a takeover. UK-based Nexo has announced a 60-day deal to look at Vauld's business. It is going to use that time to consider buying 100% of the company. The deal is also exclusive. That means no other firm can attempt a takeover during that 60-day period. Singapore-based firm Vauld froze withdrawals on Monday. There's no indication so far that freeze will be lifted during the takeover. Vauld CEO Darshan Batija said on Twitter, the company is trying to protect its customers. Nexo has also said it sympathizes with the affected users. It is also aiming to provide assistance, but it also emphasized a longer-term outlook. Vauld reportedly has a hole in its balance sheet in the mid to high double-digit millions of US dollars. That is according to the block. Here is the takeaway. The consolidation of crypto firms continues to grow. Some are acting as lenders of last resort, potentially helping those in trouble, but it's still not clear whether that's going to be good news for every customer at those firms. There are big worries today, meanwhile, for those with holdings at Voyager Digital. Voyager has just filed for bankruptcy in New York. It has only been a week, of course, since it suspended withdrawals and trading. Voyager has had credit lines from FTX's Sam Bankman-Fried via Alameda Research. Apparently, that has not been enough. Things, though, could be improving for troubled lender Celsius. Despite frozen withdrawals, the Celsius community continues to support it. Some have banded together overnight in Asia to short squeeze bets against Celsius using its token CEL. Users bought CEL on FTX. They then withdrew the token to a private wallet. According to June Analytics, that cut the FTX wallet from 7.5 to 4.5 million CEL. Twitter user @TheRealPlanC said that meant FTX was essentially CEL insolvent and it didn't have enough tokens for short sellers to cover their bets against Celsius. CEL's price surged to $1.07 yesterday. It had fallen back to 90 cents as of 10 a.m. Hong Kong time today. Celsius has also paid off another $41 million worth of debt. That means liquidation prices for its wrapped Bitcoin loans are now $2,722. That's according to DeFi Explore. It adds up to a huge uncertainty for Celsius, though, and its customers. Just last week, the company's restructuring lawyers reportedly asked it to file for Chapter 11 bankruptcy. The company, though, apparently has said it wants to avoid that at all costs. So, what are its chances of survival? Forecast's Carolyn Wright takes a look.
Chapter 11 bankruptcy allows a business to continue to operate while a court helps it restructure debt and obligations. And one expert told Forecast making such a move could be beneficial, explaining that past errors shouldn't automatically lead to the demise of a company unless there are fundamental problems.
The benefit of a Chapter 11 is obviously it keeps the company going. It gives them opportunities to find new finance. It ring fences them to an extent from their creditors, and it really will come down to whether their basic model is a good one or not, and that will be something that the court in essence has to kind of determine. But I think with them, it gives them the opportunity to go out and find new backing. They will have to explain, why things went as wrong as they did go wrong. What are they going to do to change it?
However, both Celsius and its community are making efforts to prevent bankruptcy becoming necessary by paying down loans and squeezing out short sellers. But will it be enough?
Once they got themselves into this situation, they actually are doing all the right things, but maybe they shouldn't have gotten themselves in this situation in the first place, or they could have sold earlier. That would have been better. But at this moment, they are doing all they can and doing what is prudent, if only a little too late.
Tyrannus believes BlockFi, which signed an agreement last Friday on a revolving credit facility with Sam Bankman-Fried's FTX, stands a much better chance of surviving.
BlockFi, even though its valuation get chopped to smithereens, it's still going to be able to restructure and somehow survive in somewhat a shadow of its former self. Whereas Celsius, it's just too difficult because you're staring at too much of a debt, and no one is really interested to buy them out to inherit that debt.
Russell Thompson of Liberty Road Capital told Forecast it's time for a shake-up, saying it would be healthy for the ecosystem for a number of what he calls bad actors to go under, and for new actors that have a different set of belief systems to replace them. Meanwhile, Sullivan says the key question is whether the model crypto lenders are operating is reasonable and has a chance of being profitable long term. In the meantime, investors are learning a lesson. I
think the reality is that people will now be aware that lending should have limits, and that perhaps, like most of these things, as they say, historical evidence, past track record is no guidance to future performance. So I think there's going to be a lot more of that going forward, that people are going to ask probably, slightly harsher questions than they've asked in the past.
Having gone from $11.8 billion in assets under management mid-May to near insolvency, Celsius has a lot to do to make a comeback. I'm Carolyn Wright, Forecast.
Meanwhile, another central bank has called for better investor protection in the wake of the crypto crash. The Bank of England has echoed calls from the Monetary Authority of Singapore for stricter rules. In its financial stability report, the BOE said broader risks are growing. That is as the crypto sector expands connections with the wider financial system. It has also highlighted how vulnerable crypto firms were because of the huge amount that they've been borrowing. The BOE, the MAS, and the Reserve Bank of India are all now urging investor caution over crypto. If you want to find out more about rule changes being considered by central banks, by other regulators as well, head to our website, forecast.news. You can find the latest on what's happening and all the analysis you need, as well as more on there. Not everyone is worried about what's to come for the sector, though. The Wolf of Wall Street himself is now backing Bitcoin. Jordan Belfort was once an avowed crypto critic, but he says that now Bitcoin is a long play. Speaking on Yahoo Finance's The Crypto Mile, Belfort said investors should be looking long term. He said the investment horizon for Bitcoin should be around 3 to 5 years rather than 12 or 24 months. He says the time will come where Bitcoin will start to trade more like a store of value and less like a growth stock. Belfort, of course, was the inspiration for Martin Scorsese's film The Wolf of Wall Street, which starred Leonardo DiCaprio. He is now currently an investor in several crypto-related companies, including wallet and NFT startup Squirrel Technologies. And finally, in South Korea, metaverse drinkers, yes, you heard that right, have got an upgrade. Jan has proclaimed itself the first corner of the metaverse dedicated to drinking. The country's largest convenience store, CU, is launching banners for Jan's signature alcoholic drinks and snacks. That means that users can hang them in their virtual lounges. A real-life delivery service is also being planned, allowing Jan fans to order CU's food and snacks using those banners. Unfortunately, it still looks like we're still some time away from being able to eat and drink those snacks in the metaverse as well, though. All right, that is it from us today. We've got the latest, of course, for you on Twitter. Follow us there at @forecast_news. For now, though, I'm Forecast's Joel Flynn. I'll see you next time.